Today in the grain market, soybeans were mixed. There's rain in Brazil versus that technical buying and had that market moving on both sides of unchanged. Commitment of traders did show that speculators are starting to curb some of those short positions there, and it kind of makes you wonder if the bottom is in, even though we did have a little bit of a sell off. Just some profit taking here, but we had an 18-cent range, and the market did spend some time above that $12 mark. I think that's significant right now. Option open interest still has more puts than calls, but we're still watching that. The CVOL is at 19.9%, with the oil at 32.8 in the meal at 24.3%. Corn today was firm. Money managers are covering their short positions, as the CFTC data is saying, and maybe they're becoming a believer that that bottom is in for the corn as well. But lest we forget that the size of these positions is historically very high, so we still have some high short positions going on. Currently, we're still holding in that 440 area right now. We did add 3,100 to the call side and 1,000 to the put side, so we still are having those options migrating over towards that May contract. The CVAL for corn is at 24.5%. The real story today was the wheat, though. It was higher. That dryness in the southern plains and the Ukraine exports are down 9% because of the attacks on the grain infrastructure in Odessa. I think that really sent the market much higher. Now, we did get up to 541.5, but it's still like a choppy range. We're still in that same range from 523 to 556. And this range is really on the low of the market for wheat. So, perhaps while we're kind of off the bottom, it still may be a sustained rally might be difficult to come by. Option open interest on the $6 calls is really the objective for wheat, but it's going to be a little bit of time before we get there if we do. CVOL for wheat is at 33.1%.